Hi, my name is Darren Joseph from HEJ.tax. We're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having a conversation with the world expert on information sharing agreements, Mark. Mark, would you please introduce yourself to those who don't already know you?
Yeah, so I have been specializing in automatic exchange of information and exchange on demand for 20 years, and I've consulted with the EU Commission and the OECD, and I focus exclusively on automatic exchange of information. I don't do anything else.
Okay, that's great. What if the advisor correctly informs the US exposed client on their self-reporting obligations? Under what circumstances could there still be some issues?
Yeah, I can't emphasize how important this is. This is a critical follow-up to the question that changes the analysis significantly. If the advisor provides complete and accurate information about the US person's self-reporting obligation, it moves from potentially criminal conduct to a much more compliant structure. And here's the breakdown of the circumstances under which the US could still prosecute or penalize the advisor. But the defenses now are much stronger for the advisor. The advisor says it's true that due to Svalbard's unique status, a financial institution there may not be reporting your trust details to the IRS. However, this in no way eliminates your personal obligations as a US person. You're still required to report this trust and any income it generates to the IRS on FBAR 893835. Failure to file these forms carry a severe penalty. So why is this advice defensible? The advice is now accurate, complete, and compliant. The advisor is no longer facilitating concealment. They are promoting transparency and compliance. The advisor's duty is to inform the client of the law, not to judge the client's decision to use the complex structure. The advisor would have a very strong defense against criminal prosecution because the key element of willfulness, intent to defraud the government, is absent. The advisor is not conspiring to hide anything. They are explicitly telling the client what is to be disclosed. So circumstances where the advisor could still face risk. Even if this compliant advisor, the advisor is not completely risk-free, the US could still scrutinize the advisor under the following circumstances. If the advisor is a promoter of abusive tax shelter, this is the biggest risk. The US government could argue the primary purpose of the Svalbard trust structure, which the advisor is marketing, is to avoid tax. The advisor could be penalized if they make false claims, if they exaggerate the confidentiality or tax benefits of the structure, implying that while reporting is required, tax can be avoided. Know that the structure is a sham. Now, this to me is the single most important point. If the trust has no real business purpose, no non-tax purpose, and exists solely to hide assets, advising on it, even while mentioning reported, could be seen as promoting an abusive scheme. So what I promote, more because of the confidentiality, because there's no exchange on demand, nobody can get the information, it's far superior to use this structure than what people use for asset protection, such as the Cook Islands, Nevis, some of the Channel Islands. So it's got a real purpose. And in fact, over the last few weeks, I'm busy with some 8 or 9 figure US clients. And it's not for tax. They're declaring the tax. It's to do with the confidentiality. There are a whole lot of reasons for confidentiality. I'm dealing with a number 5 in one of the world's biggest banks. And he doesn't want his bank to know that he's investing in the same thing as the banks, even though he's declaring his money. So I've got some cartoon gifs of Cook Island trustees, which are dinosaurs with a treasure chest. And there's a big comet coming down on their head, automatic exchange of information, exchange and demand. So people pushing Nevis and Cook Islands, they don't know anything else. Okay, so the real purpose for this structure is confidentiality and asset protection. So there's something here that the IRS can say, the advice is too cute by half. The IRS can use step transaction doctrine to ignore the formal structure of a series of legal steps and look at the overall transaction to determine the true substance. If the entire scheme is designed to achieve an illegal outcome, the advisor could be implicated. But it's going to be very difficult for the US to prosecute when you tell them this is the purpose, it's not tax related, and you must report. Now, of course, the advisor, he doesn't monitor whether the client actually fills in those forms or not. If the advisor is incompetent and wrong, this is my biggest problem dealing with people working for me. They don't quite understand everything that I do because it's complex, and they give wrong advice. Okay, and so they could face civil penalties. Okay, so the key defense of the advisor, if investigated, the best defense for the advisor would be documentation, meticulously detailed engagement letter and memos that clearly state the client is advised that they must comply with all international information reporting requirements, FBAR 8938, 3520, and pay all applicable taxes. Substance over form, being able to demonstrate that the structure has a legitimate non-tax purpose, such as asset protection, estate planning, multi-jurisdictional family, legitimate business operation. I've got a lot of oil businesses where people don't want the competitor to know that they're doing the oil business. So the conclusion is informing the US person of their self-reporting obligation is the single most important action an advisor can take to avoid prosecution. There are banks that say, US person, I'm not touching you, I don't care. But if they follow this advice and tell the client officially with this meticulous documentation that the client is obligated to report and that the structure is not for tax evasion, they're fine. Okay. So I think this has been one of the most important and interesting interviews that you've done on FATCA, because nobody touches planning for FATCA. They're all too scared.
Exactly. Mark, thank you very much for sharing your time, your expertise. If someone wanted to reach out to you directly to find out more, what's the best way to find you and contact you?
You can just find my website, which is co-ownershiptrust.com. That's with a dash. Or a Google search of my name and trust, and you should find me very quickly. And then WhatsApp me.